Hello and welcome to Roxgold's 2021 BMO Metals and Mining Conference presentation. I'd like to extend a thank you to BMO for hosting us again this year, albeit virtually. Roxgold is an emerging West African gold mining company and is on the verge of becoming West Africa's next multi-asset gold mining company, with our flagship operation Yaramoko, located in Burkina Faso, our emerging growth project Seguela, which is in Côte d'Ivoire, in which we're progressing a feasibility study due to be released next quarter, that's Q2 of 2021. And then our advanced exploration property, Basura, at the southern end of the Houndé greenstone belt in Burkina Faso, which has been seeing some very strong exploration results. 2020 was a challenging but very rewarding year for Roxgold. Our operations team confronted the challenge of COVID very effectively and very quickly, and we were able to post a very strong year of operations, coming in at above the upper end of our guidance range in production, a strong cash cost performance, as well as generating nearly $50 million in free cash, which we were able to deploy towards our growth projects at Seguela and Basura. The value proposition of Roxgold, we believe, is very strong. You have a proven mine development and operating team, continuing to extend and grow the Yaramoko mine, the new Seguela project coming along the track, and we believe very strongly that we can bring Seguela into production without resorting to additional equity capital. So on a per share basis, the impact of Seguela is going to be very strong. And then the third leg of our stool is the Basura Expiration property in the southern end of the Burkina Houndé greenstone belt, which we're advancing as well. And we have a strong balance sheet. We finished the year of 2020 with a little over $60 million in cash, access to financing. So that gives us a lot of confidence that our balance sheet, both our balance sheet and our continuing cash flow from Yaramoko, will be sufficient to fund the development of Seguela. And we'll have that benefit and more than double our production, more than double our reserves and resources on a per share basis without diluting our existing shareholders. Looking at sustainability, given where we operate, this is a key focus for our company. We've been very pleased with our ability to operate the project in a safe and environmentally sensitive manner. The fact that our company is growing is giving us a great opportunity to advance our people. The career prospects at Roxgold for a number of our employees have never been brighter, and we see this as an important part of the compact between our company and our host community, the communities, our host governments, and everyone involved, everyone who's a stakeholder to Roxgold, that we transfer knowledge and we offer people a career path and progression. Our investment in communities surrounding our operations has also been continuing to ratchet up, and we're having a significant impact on improving the livelihoods of people in those communities, and we're very proud of the work that we've been doing and look forward to continuing that for many years to come. Turning to Yaramoko. Yaramoko is our flagship operation located on the Houndé greenstone belt in Burkina Faso. The Yaramoko came into production in 2016 after it was discovered by Roxgold in 2011, so 5 years from the initial discovery hole to production. Shows you, I think, what a mining-friendly jurisdiction Burkina Faso and indeed other parts of West Africa really are. They are very, very accepting of foreign direct investment. And Yaramoko has gone from strength to strength. When we started the project, we had just over 800,000 ounces of measured and indicated resources. And now today, having mined over 600,000 ounces from the project, we still have over 800,000 ounces of measured and indicated resources. So in many respects, we believe Yaramoko is demonstrating the hallmarks of a very good underground gold mine, insofar as what you see on paper in terms of a reserve mine life is not necessarily reflective of what the actual mine life will be. We've been able to continue to extend the mine life, replace depletion at Yaramoko by continuing the drilling as the ore body has progressively got deeper, and we've also made discoveries elsewhere on the property that have been able to both enhance our production profile and extend our mine life, which we're very happy about. And as you can see here, the bottom right-hand corner of this graph, I think, is very instructive. Shows you the starting position for M&I in 2014 when we published our feasibility study. It has historical production to date, approaching that 600,000 ounce level that I mentioned, and we still have measured and indicated resources of over 800,000 ounces. So we believe very strongly that any thought that Yaramoko is a short mine life asset are misplaced, and we've enjoyed providing some further evidence this year to the contrary, and we look forward to doing that, continuing to do that in the coming years as our drill program continues to roll out. Looking at Yaramoko, and this is the 55 zone, which is the principal deposit at Yaramoko, you can see the drilling platform that we have there at the 4700 level. This is approximately 600 metres below surface and has been the first real opportunity that we've had to drill significant meterage from underground. We've had 3 underground drill rigs turning here, and the program continues. And the program has been focused on a variety of different aims. First and foremost has been the conversion of inferred to indicated to continue that depletion, replacing depletion and extending the mine life at depth. The main extension at depth, we believe, will come next year from the next drill platform that you can see at the 4300 level, so an additional 400 metres below where we're currently drilling from. And that'll start to push out and really extend the bottom of where the current mine plan is defined at. So that's so a lot of drilling to come at Yaramoko, both this year and into next year. And ultimately, we continue to peel the layers off the onion and see what the ultimate potential for Yaramoko will really be. Another interesting item that happened in the course of 2020 was that we defined an open pit at the top of the 55 zone. So this is an opportunity for us to mine an open pit. It's in reserves now, and it will be mined at the end of the underground mine life. We can't bring that forward because a significant amount of surface infrastructure will go into that pit. But what it does do is it gives us nearly 3 years of additional mining. And when I say 3 years of additional mining, I mean open pit grades around 7 grams per tonne. So a very high grade open pit to finish off the mine. So that's what's been able to extend that mine life significantly. What we hope we'll do is continue to push the mine life underground for a number of more years to come, but we'll always have that open pit to finish with. Looking at the regional package, we've had a significant sort of reworking of our understanding of the deposit and the property, and that's led us to generate a number of new targets for follow-up. We have several surface rigs working at Yaramoko at the moment, drilling these targets. In the past, we've really approached, I think, the target generation as looking for more 55s, and that would obviously be very nice to find another 55 zone. But with the open pit work that we did this year, we realised that maybe not everything necessarily looks like a 55 zone. So that's caused us to go back and revisit some of the historical work. And the idea here is that we look for shallow, open pittable material. And then hopefully if we can find some more of that, then some of them may have deep roots that turn into an underground opportunity like 55 and Bagassi South. So a lot of work going on with the drill bit at Yaramoko around the 55 zone, underground and around from surface. Bagassi South's getting a considerable amount of drilling, and then a number of the targets that you see there to the north of the operation, like 109, 300 and Haho. And that's been driven by our VPX, Paul Whedon, who's brought really a new lens to look at the project through, which has been very encouraging. The new jewel in the crown is Seguela, and this is our property down in Côte d'Ivoire. It's an asset that we acquired from Australia's Newcrest Mining in 2019. So we've owned the project for less than 2 years and have made a significant amount of progress, which I'll touch on. The property itself is located in the northwest of the operation, not that far from Barrick's Tongan operation and Perseus's Sissingué mine in the northern part of the country. And it's been going along extremely well. We acquired this asset in 2019 for $20 million and a further $10 million payable upon first production. And it's returning multiples of our upside case when we acquired the property. And I'll touch on the exploration success that we've been having at Seguela. We published a preliminary economic assessment last year on Seguela, and this is very much a snapshot at a point in time, and I don't think should be read to represent the full potential of the project in any means. What we've been doing subsequent to publishing this PEA from last year has largely been focused on infill drilling, so converting the inferred mineral resource base that informed the PEA to indicate it, and that's gone very well. And we've seen that through the results at particularly Ancien, the high-grade open pit that underpinned the preliminary economic assessment. But whilst we were in the process of that infill program on the known deposits, we continued testing some of our targets, and that led to the discovery of Cooler, which I'll also touch on in more detail. But that has seen some extraordinary high grades also within an open pit context. So what we've been able to do is bring Cooler into the planning process. We deferred our feasibility study from the end of last year, when we would have probably delivered it in December, to the second quarter of this year, to enable us to do the infill drilling at Cooler and then put it into the mine schedule, mineralogy testing, mineralogy test work, etc., so that it could be included in the feasibility study, because its impact, we believe, will be very dramatic on the economics. As you can see here from this slide, this was the PEA mine function, so excluding Cooler, very important to note that. And as you can see there, the gold bars, the gold bar portions are indicated from Ancien, which was previously the highest grade deposit, running around 5.5 grams on the property. And you can see it acts as a bit of a turbocharger in those early years. What we've been able to do is extend Ancien and then add Cooler. So the production run rate at Seguela in that first 6 or 7 years will be very high. So basically what you're looking at is a very similar looking project in terms of the physical parameters. So we do not expect the capex, the pre-production capital, to change much, but we've added a very significant deposit in the form of Cooler to again increase substantially the amount of ounces that you can expect to see in that life of mine plan. Looking across the property and the history of resource growth that you can see, when we acquired the property from Newcrest 2 years ago, it had 400,000 ounces of inferred resource at one deposit, Antenna. And we liked what we saw at Antenna, and we saw the opportunity to increase that and then wrap a project around it and hopefully have success on some of the satellites. There were no other resources on the books at Seguela when we acquired it, and we quickly were able to build resources through Ancien, Boulder and Agouti, as you can see, and then ultimately add Cooler into the mix. So as you can see, from 400,000 ounces 2 years ago, we're now sitting at around 1.5 million ounces combined at the property. So it's been a dramatic growth. It's seen dramatic growth over 2 years and has responded extremely well to the drill bit. As you can see from the map, there is a very large number of targets that we have in front of us. We were starting the process of testing these targets when we discovered Cooler last year. And then I think understandably our attention went to infilling that so it could be included in the feasibility study. But we're now getting back onto that as we go to start testing those targets. And some of the ones that are new off the rank include P1, Winey, Elephant, and a new prospect called Sunbird. Looking at the couple of the deposits in detail, here is a long section of the Ancien deposit. So this was a deposit that had one drill hole in it when we acquired it from Newcrest. We saw a lot of potential there, so we drilled it out aggressively, and as you can see there, added over a quarter of a million ounces of indicated at 5.5 grams. So this is all pit constrained. So this is all looking to be mined from an open pit. So in an open pit context, one of the highest grade open pits anywhere in West Africa. The important thing to note here is the mineralization extends at depth. As you can see here on the long section, some very strong results that are below the floor of the current open pit shell. And that includes 10 meters at nearly 60 grams, 15 meters at 11, 4 meters at nearly 60 grams. So this system is alive and well below what we've currently defined as the pit floor. So that's something, and this potentially presents itself as an underground opportunity for us going forward. And that's a theme that you'll see repeated at Cooler. Cooler, here's the long section. This is the new discovery made in October last year, so it's come together very quickly. We have an inferred resource at Cooler, again pit constrained, of nearly 300,000 ounces at over 8 grams. So Ancien, which was going to be one of the highest grade open pits in West Africa and still will be, has been put in the shade somewhat by the results that we've seen at Cooler. And again, what you can see here and what we believe we'll define with further drilling is that high-grade mineralisation extending down plunge at depth below the current pit floor. And what we've been doing now is we've just wrapped up the infill drilling program at Cooler, with some more results to come shortly, but we've commenced an extension drilling program with 2 rigs drilling the down plunge extension of Cooler. And as you can see here, we have some very good high-grade indications there, including 14 metres at 4 grams, about 150 metres down plunge of the pit floor where it currently stands. And what we've been drilling, starting to drill that, and we've certainly liked what we're seeing in terms of the potential to extend that mineralisation. So please don't think that Cooler and Ancient have revealed all their secrets. We think that they've got plenty more to give. Hopefully we can see enough from the drilling and enough continuity in grade and width that we can then start to look at these as underground. And what's important about that is that it would prolong the very high grade feed from Cooler and Ancient for a number of years from what you will see in the feasibility study. So the underground will be won't have time to make it into the feasibility study, but it's certainly an opportunity that's we're very much aware of and are prosecuting with some endeavour at the moment. The pathway to production at Seguela, and I think sometimes that this may be a little underappreciated, just how quickly Seguela is coming along. What we've tried to do here, it's a little complicated, but we've tried to sort of lay the timeline for Seguela alongside what we experienced for Yaramoko. And as you may recall at the start, I mentioned that Yaramoco was in production 5 years from first drill hole to production. And that's indicative of what you can achieve in West Africa with a straightforward project and a team that can execute. And we think that was what we're going to see again at Seguela. So importantly, at Seguela, it's been permitted. So we have the mining permit in hand for Seguela. So critical path now for us from an investment decision point of view is to complete the feasibility study, close the financing, the additional debt financing that we're looking at, and then get going. We've actually commenced early works at Seguela. We've been upgrading the roads. We've started the camp construction and some of the feed front-end engineering and design work to enable us to make a seamless kickoff to the project once we've completed the feasibility study and financing next quarter. So going down to Basura and back into Burkina Faso, and as you can see here, it's located close to the Ivoirian border at the southern end of the Houndé greenstone belt. Basura is a project that Roxgold has been working on for the last 2 years. We announced the discovery of Basura at the start of last year, and since then we've been drilling very actively on the project and have gotten over 150 holes into the project to date. The primary project is made up of 2 main areas, Fofora and Galgooli, and we've got 2 drill rigs at each property at the moment, continuing to drill out both the defined targets, the mineralisation that we've found, as well as drilling some of the satellite targets that our field work has been defining. Turning to Fofora, which is the northernmost prospect, you can see here what's interesting about Fofora is that it covers a very large area. This is a 9 square kilometre area with the hallmark of some significant historical artisanal workings. And what that is represented in about 5 vein corridors that we've defined to date, as you can see here. And what we like about Fofora is that those vein corridors extend over multiple kilometres. So you're looking at opportunities here with multiple kilometres of strike, multiple parallel zones, and then some very good grades and widths within those. And as you can see here, the strike rate has been very good as we've stepped out from Fofora Main, which was our early focus. As we've crossed over, we've had some very good results out recently on the VC2, not that imaginatively named, Vein Corridor 2, so we might work on that. But what you can see here is that those sort of results are being replicated as we've stepped out to the west on those multiple vein sets. Heading down a little bit further south to Galgooli, this was a brand new discovery by Roxgold last year, and it's been showing up extremely well. Again, a little different to what we've seen at Fofora, But what we see here is some very high grade results over decent widths. So we like Galgooli as a potential underground target, maybe with an open pit on top, versus a series of open pits at Fafora if it all hangs together. So whilst it's relatively early days with Basura, we have put a lot of drilling into this, and I think, again, probably more drilling than people may realise. So north of 150 holes. Our goal is to estimate a maiden resource at Basura before the end of this year. So late 2021, we are on target to have a maiden resource at Basura. And from that, we can then assess the opportunities for further growth and potentially commencing some of the development works in terms of economic studies and permitting, etc. I won't put the cart before the horse. We're still looking to see how the drilling continues, but we've been very encouraged by what we're seeing as we drill, both in terms of testing new targets at Basura and also then infilling the existing and already discovered veins. So I think time will tell, but we're very optimistic that Basura has the potential to become the third mine in our portfolio and really help us achieve our goal of becoming West Africa's next multi-mine, multi-jurisdictional mining company. There's Basura. There's also additional targets that we've really only just scratched the surface on, including Bantara and then an area to the south of Galgooli. We also last year entered into 2 joint ventures with Arrow Minerals, an ASX-listed explorer, to extend our land position. So we effectively doubled our land position down here at Basura because we like the area so much, and we're going to commence some work on those Arrow ground in the coming months. So another thing to look out for. So if we look at sort of in closing, Roxgold's portfolio has expanded greatly over the last 2 years. I think if you went back to 2019, the start of 2019, you might have been excused for thinking that Roxgold was somewhat of a one-trick pony. And then at that time too, there were sort of question marks about the ultimate mine life at Yaramoko. I think as a company, we've been able to take some significant steps forward to shake that up and change that narrative, both with the opportunity to become a multi-mine company with Seguela coming along, the sort of the wild card that is Basura, the extensive regional portfolio that we've worked up ourselves in Burkina Faso, but also inherited as part of the Newcrest acquisition. So Newcrest, you may recall, were very early movers into Côte d'Ivoire. So they've curated a large regional package of over 3,000 square kilometres that we now have the benefit of, and we're starting to push out into that area. So from a sort of an offering perspective, I think Roxgold has very much hopefully broadened its appeal to investors. We have a clear path for growth. We have a funded path to growth. We don't believe that we're going to be coming back cap in hand to our investors asking you to fund our growth. This growth will be funded from the cash flow that we're generating at Yaramoko and have generated and built up on our balance sheet. So we're very comfortable and very optimistic about what the future holds. So near-term catalysts continue to be drill results out of Seguela, Basura and Yaramoko, the feasibility study and ultimate decision to start production or start building at Seguela, hopefully in the second quarter, which we're on track for. So with that, I'd like to welcome any further questions you might have. Either reach out to Graham Jennings or myself at Roxgold, and have a good and positive conference. Thank you very much.